Hi, I'm Macy,
And I'm Julie.
and welcome to Premium Perspectives, the podcast where we talk about insurance like it is the most exciting thing in the whole world.
Okay, maybe not the most exciting, but that's why we're here.
Exactly.
Insurance runs the world, and we're here to talk about it and make it fun.
Yes. Always make it fun.
Always.
So, first bit of news.
Yes, we have our very first podcast sponsor. Yay! It's Market Retrievers, which some of y'all probably have heard their names before. We're so happy that they have partnered with us to bring you Premium Perspectives. We appreciate them so much.
Yes. So, if you know Daniel Smith and Abby Seltz, they are the owners of Market Retrievers. It's a boutique marketing agency out of Nashville, and they've been a longtime partner of ours and many of our agents. They know a lot about the insurance industry, so they know how to market towards it. And they're a really awesome partner. So learn how your agency can fetch your targets at marketretrievers.com.
Yay!
Yay! So Jules, tell me about your week. How are things going at CAA?
It's going good. It's been a busy few weeks. As some of y'all have probably noticed, we collected Q2 member dues. So all of your statements have already been uploaded to the website. So you should be good there. Let me know if you're having any issues. We can always work with Macy to get you a login if you need it, get you access to your statements, whatever you need, just let us know. Next, we'll be doing profit share again. I'm anticipating probably by, I don't know, in the next 2 weeks at the latest, not this Friday, but next Friday. We should be getting profit share processed for all this last batch that we've gotten in, and you should see your statements being uploaded by next Friday. And then your ACH to your bank accounts. So if you have any problems or questions about that, just let me know. Besides that, I don't know, just getting excited about summer series, excited for July to get here. Personally, we had a crawfish bowl this past weekend. My bestie Macy and her sister Candy came.
It was so fun.
It was
Nobody
fun.
knows how to throw a party the way Julie does.
It's a lot of fun. And my husband is a Cajun and can cook some crawfish. Macy doesn't eat them, but that's okay. Nikki and Trent came. We had a really good time. But it was a really good time. We always have fun at the crawfish bowls. What else? Oh, I do have something. I'm so silly. Y'all know me. I'm a silly person. While I was shopping for the crawfish bowl stuff, I had a little old man walk up to me have I told you this story?
No, you haven't told
Okay.
me.
I had a little old man walk up to me at the grocery store. This is so silly, y'all. And I don't know him. Never met the man in my life. And he just walked up to me and he said, "Hey, do you know anything about whatever kind of meat he was looking at?" And I was like, "No, I mean, I can sort of tell you what to do or whatever, but I don't know." And he goes, "Hey, you want to hear a joke?" I mean, this was probably like an 80-year-old man. And I was like, who's going to tell him no? And I was like, "Yeah, I want to hear a joke." And he said, "Okay, do you know why the military dog flushed the toilet?"
Why?
It was his duty. Isn't that silly? It's so silly, but I'm like, who does that at the grocery store?
Yeah.
He made my day. I'm just like, I love to go to the grocery store and laugh. So, needless to say, I've taught my grandson the joke. I've told Lindsay, please teach this to Rhett because it's definitely a dad joke type of thing.
Yeah.
So anyways, that's my little bit of fun for today. Tell your kids.
That's so
I know it's silly. Okay,
That's
so what's
sweet.
up with you?
Yeah, I'm just gearing up for summer series, getting things ready for July, the event, app configuration, getting that ready, the website, meeting with
Gosh.
carriers, vendors. Excited for summer, honestly.
Right, me too.
This weather right now is so dreary and rainy. I'm just like, I want the sun.
Me
I want to be
too.
at the pool. And also have some fun travel coming up
Mhm.
with going to New York City with my church, which was going to be super fun.
That will be fun.
Then I'm also going to Chicago to Lollapalooza
Ooh.
for a music festival, and I'm so excited. And I
That's
just bought an ACL ticket.
Oh my gosh, it's a
I'm
music-filled summer.
Yes, very much so. And I'm broke as a joke.
That's
But it's okay. Yeah.
My summer is like Astros baseball on the beach. That's my summer.
That's fun. Oh, and I'm also seeing my friend Emma in Cincinnati, which I'm not a fan of Cincinnati.
No, but you get to see your friend.
Yes, we love our friends at Cincinnati
Yeah.
Life.
That's
We
right.
love them.
Yeah.
Just not the city. I'm just like, what is there to do? Yeah, that's all that's been going on with me. So we have a really cool episode planned for you today. We have Ryan Murry with ICI out of Kansas. They joined probably around 2013, are super influential in CAA, and we appreciate their partnership. And then we also have John Simios, the Senior VP at Captive Resources, and they're one of our longtime partnered vendors. And we're very excited to talk to them
Very.
about group captives.
Yay! This will be a good one, y'all. Hey, Ryan and John, we're so happy to have you on today. We really appreciate you taking the time out of your day to join us. So, Ryan, you've been with CAA since 2013, is that right?
Yes.
Okay.
Yeah, what would you say has been like your favorite part of being part of the network?
Yeah.
I would say the idea sharing, the peer-to-peer interaction. Everybody in that room is facing the same challenges that we
Yeah.
are. And so it's nice to hear from people who aren't competitors or threats. It's nice to hear how they're handling uh, the same challenges we are.
Yeah.
Yeah, the common ground for sure.
Right.
And then John, y'all being a longtime partner of CAA, how have you been able to help agencies like ICI?
Boy, I'm so glad you asked that because this captive product is just a little bit different than buying regular insurance. And so we've teamed up with a number of CAA agents. Um, and we don't work with every agent throughout the country, but the ones that we've worked with the CNA have been outstanding. So it's helped us, and we hope we had a chance to help them as well.
Good.
Awesome.
Yeah. So, what type of business is a good candidate for a captive? Either one of y'all, whoever wants to jump in,
John,
or both. I can both talk. It doesn't matter.
the simplest answer is safe companies that are spending a few $100,000 on their general liability, work comp, and auto insurance. I mean, that's probably as simple as you can get. John, what would you say?
No, I agree with you. In a day and age when you're not supposed to discriminate, we discriminate. We only want to invite in good, safe companies, and that's where it works best for companies are those that are committed to safety, that are entrepreneur. I agree with you, Ryan.
For a variety of industries, but I mean, we're really looking for those with large auto fleets, a lot of employees, and a decent casualty exposure. So again, in the group captive, the only three lines of coverage that go in there are general liability, auto, and work comp. So those are the lines that need to be driving premium in order for them to qualify for a group captive.
Okay.
And the other thing I'll add to that is in an insurance industry where many, many times the insurance industry will dictate this is what your pricing is going to be depending on your industry and your state. In a group captive, it gives the buyers a lot more control. 100% of the premiums in our programs are based on each member's last 5 years of losses. That's been one of the biggest benefits that I've heard members who've joined our captive say.
Definitely. Ryan, I think you answered this next question, but what coverages does a group captive offer if you want to re-emphasize?
Yeah, so it's general liability, auto, and work comp. The other advantage I will say about the group captives is some of them, not all of them, some of them offer a higher general liability limit and auto limit than just the standard 1 million, 2 million on the GL and 1 million combined CSL on the auto. There are captives that will offer 2 million, 4 million GL policies and 2 million combined single limits on the auto. So that helps. We're still buying excess policies in the traditional market or umbrella policies. That helps us when it's a little higher attachment point than 1 million. So, John, what percentage of CRI captives would you say offer those higher limits? Is it half, less than half?
Well, with 45 group captives that we have here at Captive Resources now, I would say that the majority of them now have $2 million of limits built in. Most all of our captives are moving that way. And in fact, we have 2 captives today that are offering $5 million on the underlying general liability and $5 million on the underlying auto. So we're seeing a movement towards that higher limits in all of our captives.
That's great.
Gotcha.
So what industries are a good fit?
We've seen a tremendous amount of companies that are in the construction industry and all different facets of it, from electrical and mechanical contractors to demolition and scaffolding contractors. I would say that's a large portion of our book. The second portion, I would say, is anything that's auto-driven. We have captives for large long-haul trucking fleets, waste haulers and fuel haulers and aggregate haulers, those types of industries, ready-mix contractors. We've seen those were large fleets of autos that the insurance world isn't excited or anxious to write today. Those have been a big area in the last probably 3 to 5 years.
Mm-hmm.
Yeah, I'd echo that. I mean, we've got a couple heavy industrial contractors that are great fits, a couple transportation risks. We've got an oil and gas contractor. Captive Resources has an oil and gas specific captive. We've also got an HVAC contractor that is large enough to qualify for a heterogeneous captive.
Sure. What are the tax implications?
Well, in all of our group captives, we offer a guaranteed cost type policy. So it's not that much different. And with part of that guaranteed cost policy, if you could visualize about 60% of those premiums are set aside, and each of the members has a chance to get that back, depending on how safe they are. The captive premiums are a tax deduction, like most companies take with their group captives. But when the money comes back from that 60% bucket, albeit 4 or 5 or 6 years later, it's a taxable event at that time.
Mm.
So a lot of people takes the tax deduction in buying their insurance, and then it becomes taxable on the way back to them. So
Yeah.
And while these captives are domiciled offshore, typically Bermuda or Cayman, when the money comes back, as John says, it's taxed as a normal American corporation. Isn't that correct, John?
100% ordinary income, typically, yes.
And typically, when CPAs hear Bermuda or Cayman, they think something fishy's going on. But the other thing that Captive Resources does is, you might tell them who your partners are that audit each of these captives. I know PwC. Is there anybody else?
In all of our 45 captives, we have a big 4 accounting firm, Ernst & Young, Price Waterhouse, KPMG. You're right. They all have a set of financial statements for almost every one of our captives.
Mm-hmm.
So we have a lot of eyes that are taking a look at it. And then we also have a different big 4 company typically doing some tax work for us. So between the audit and the tax, we've got big 4 accounting firms in almost every one of our captives.
Yeah.
Nice. A lot of my friends work at those so I went to the UT Business School and they have a program. It's like IMPA and they literally all end up at those big 4, which is cool.
Well, in my next life, I'm either going to be a rock star or a captive exclusive guy like John Simios. So
There you go.
Heck
Very
yeah.
good.
pretty comfortable.
Ryan, you are so well versed in this that you keep answering the next question. Because the next one we have is where are most captives domiciled?
John might know the numbers better than me. I mean, 98% of them are in Cayman and Bermuda. Is that maybe
I'd
not
say
that many? I don't know.
I'd say the majority are set up in the Grand Cayman and Bermuda, but I will tell you that the United States has started setting up these group captives in an effort to say, well, I think we can try to do what they're doing in Grand Cayman and Bermuda. Ryan's 100% correct. Those are 1, 2, and then the various states are setting them up, and they're all different percentages as you keep going down certain states. Vermont, Colorado, Hawaii, stuff like that.
Yeah. Grand Cayman sounds nice, doesn't it?
What I've always been told is the reason most of them go to Cayman or Bermuda is because the infrastructure, so to speak, is already set up there for these types of businesses. So
That
Yeah,
makes
they've
Yeah.
got the captive laws that make U.S.-based companies getting dollars back. They've got captive accountants and captive attorneys and captive reinsurance companies. Yeah, they've got it set up with a nice infrastructure there. Correct.
That's interesting.
nice. What does an insurance certificate look like for a captive member?
Well, in all of our group captives, we have a fronted insurance program. I'm using that term fronted in an insurance term. We call them a policy issuance company. So every one of our captives has a strong insurance carrier, and they're very important to us, and we need them. So on a certificate or an auto ID card or to the outside world, there's always an A-rated insurance company that shows up on the certificate. In fact, to the outside world, unless somebody would have told them that they're in a member-owned group captive, it would look very much like just buying a regular guaranteed cost insurance policy.
Yep. It looks exactly the same. I mean, if the fronting carrier on particular captive is AIG, then AIG is listed as the carrier on the certificate. So as John said, to the outside world, just by reviewing a certificate of insurance,
Mhm.
you would have no idea that they were in a group captive.
Gotcha.
So, of course, the most important thing is when we start talking about claims. So, what happens when a member has a catastrophic claim?
What John take?
Well, great question. And I think that's one of the biggest fears companies take a look at when they're looking to explore whether they should join a captive or not. In all of our group captives, we have a retention. The majority of our captives say we only want to worry about claims under 300,000 or under 400,000 or under 500,000. And if ABC company in one of our captives has a $10 million workers' comp claim, that's terrible.
Mhm.
But our captives only take on that first $500,000. And we buy good old-fashioned regular insurance for everything on top of that. So we still need great, strong insurance carriers for that catastrophic claim. We basically tell all members who join group captives, we're inviting you to try to control your small everyday claims. That's where everybody has a chance to profit or benefit by being in a group captive.
Gotcha.
Yeah, it's the reverse of what most people think. Or the opposite rather. The catastrophic claims don't count against you necessarily. I mean, it might have an impact on your rates 5 years down the road, but it's actually the small claims that John mentioned. I mean, typically they're under 100 or 150,000. So having 10 $100,000 claims impacts you a lot more than having one $1 million claim. And you will actually, in some cases, if you have a bunch of frequency issues, you might be assessed a penalty where you have to pay some of that back over the next 3 years. But the catastrophic claim is the one most people ask about. And, in these higher casualty type industries, they expect, that's going to happen occasionally. It can't happen a lot, but it might happen occasionally.
Yeah. Okay, you want to take the next one? Our fun question that we get to ask everybody?
Yes. So this is a question that we ask every guest on our podcast. Y'all are number 2. Y'all are our second guest. So yay. What is the best piece of advice you've ever been given? That can be professional, personal, both. Just the best piece
Yep.
of advice.
And
you've ever
either one can go
given.
first. Whoever thinks of it first.
Mine, I can jump right in because it's always been, if you're early, you're on time. And if you're on time, you're late.
And you were early today.
You were early.
You'll see me always earlier than on time. And that's something I've tried to live through my whole personal and business career. So.
Yeah, that's awesome.
I respect that because I'm the late person. Like I have T-shirts that says always late. I'm just going to be late.
My sister has a sign in her bathroom that says better late than ugly.
But I try really hard to be on time.
Yes, me too.
Okay,
Well,
Ryan.
I have also been told that, John, by our EOS implementer. I am not typically an early guy, so I am usually right on time, which is late in some people's eyes. Yeah, the best piece of advice. My dad used to say there's dignity in hard work. If you're talking about quotes like John said, one of the ones I like is the way you do anything is the way you do everything. So anytime I catch somebody trying to do a shortcut or overlooking something, I remind them that you can't do that.
Good advice.
Yep.
Mm-hmm.
Very good advice.
That's all we have. If y'all have any last thoughts, love to hear it, but thank you for sharing. I think it's going to be super good for our agents to hear.
I do too.
Fantastic. If I can leave with one more last thought, it's interesting in the world of group captives that 100% of the pricing is based on the last 5 years of losses. That seems to be what a lot of our members say. John, I really love that part. So just thought I'd add that.
Yeah. Any last slides are great. Yeah.
Well, the control over your premiums is one thing, and the ability to receive dividends when you have low claims years is very appealing to potential captive prospects. We talked briefly about claims. The other thing that I think is unique about captives is every captive has their own specific claims team or claims company that handles all of the claims for that particular captive. So if you have claims frequently, which hopefully you don't, but if you do, you're talking to the same people, the same one or two people at the claims the administrator. So you get to know them on a personal level. Those people actually show up at the board meetings, which the members are encouraged / required to attend. So you get to meet the people that are adjusting your claims, and it just becomes a lot more personal. It feels as if you've got more control over how your claims are handled as well. So that's another major benefit to being in a captive, I would say. The one thing we didn't talk about because is how much premium it takes to qualify for a captive, and that's typically what most people who reach out to us say or ask is, how big do we have to be? And I mentioned it's just the GL and auto and work comp that goes into these, but depending on the industry, I would say the lowest entry point, John, is 125. Is that about right for
That's about right.
the smallest captive? And then when you get into some transportation type risks, it's 300, around 300, and then there are some that are as high as 350,000. So that's why when we start
per account, like total premium.
Yeah.
Okay.
Per individual company.
Okay.
Because some of these captives have 100 million in premiums is the total premium for the captive. So yeah, as we started this segment off, we said those safe companies that are spending a few $100,000 in insurance on those 3 lines of coverage, those are the ideal fits.
Yeah. And it's kind of interesting because while we go as low as maybe 125,000 for a combination of the work comp, GL, and auto, we also write accounts at Captive Resources that are $35 million in individual counts. So it's a pretty wide gamut in that field.
Yeah, there is.
Size. Yeah.
I think it'll be very informative, and you answered a lot of great questions. But yeah.
Yeah, and again, we really appreciate it, you guys, very, very much.
Yeah.
Macy and Julie, pleasure meeting you. Yeah.
Yeah,
Nice
you
to meet you
too.
John.
Hopefully we'll get to meet you in person one day, John.
Sounds great. Count me in.
Yeah. Ryan, thank you so much.
You bet.
You're busy.
Thank you guys. Appreciate you having us.
Well, we really appreciate Ryan and John being on with us today. That was a very interesting segment and something I've never really talked about before.
Yeah, great to learn more about. I think a lot of agents will find it super helpful.
Yeah.
So yeah, if you have any questions, feel free to reach out to Ryan.
Yeah.
Reach out to John. Obviously, they're both great guys.
Yeah.
Super helpful.
And we can put their contact information in the notes.
Yeah, absolutely.
Yeah.
So until then,
thanks for tuning in to Premium Perspectives.
bye guys.
Bye.